All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you back. Hope you guys are having a great trading session and happy joy. Happy Monday to you. Or no, Wednesday to you. Shit, that's crap. Damn it, sailor mouth. All right, happy Wednesday to you. It's Wacky Wednesday. Right? Because we don't have anything else we can call it, so it's just Wacky Wednesday. All right, we're going to go through our charts. We're going to cruise through this analysis. The great news is most of this analysis haven't changed a whole lot, but there's some, obviously some key developments here. So let's start with the euro dollar, and the euro dollar, as we had pointed out, is pushed out of its. And by the way, I just tweeted the picture of the chart of the dollar index, just so I think it's important that everybody knows this. I mean, you guys have known it, and you guys have known it a few days ahead of time, which is good. I think the general population of traders should understand being, short the dollar right now is, not probably too super smart, especially when you're, popping out of this range right now. Euro new lows, by the way. All right, so here's the euro, 50% retracement, as Paul pointed out. It comes in at 1292. You guys know I'm not a huge fan of the 50% retracement. I'm more of a fan of the 618, but I have to say that and if you minus this is the ECB, that's the ECB move, right? So you minus that spike there. I mean, where can we go? Where can we go here? I mean, some minor trendline support that we're coming into. I would assume that the 618 is going to be the more valid support for today. I mean, remember, we've had such a big consolidation here. All right, we've had such a big consolidation here. If we can hold below that consolidation, I actually think we're going a lot lower, initially. So a lot of pent up energy. When you get just everything so tightly wound up like it is, chances of a explosive move is quite high. So for today, 112.55, that should limit, even if we have really, really great data, that should limit the downside for the euro. I don't think that we're going to get much below that today. I may be wrong, but but the data is going to have to be pretty damn strong to get us there. Resistance now, I mean, you have to think about all the people that are stuck on the long side of the euro. So I always try to think when I'm trading, and this is something that I hope you can always remember, no matter, for how long you're listening in, or no matter how long it is, whenever you think of me, whenever I'm gone and done with these webinars, I want you to always remember, when you're trading, you just try to think about where everybody else is at. Okay? You always try to think, like, what's it like to be in their shoes? What's it like to be in that trader that's on the other side of this trade, his shoes? Like, if I was long the euro dollar and I picked up the euro on this breakout, and I was like, yeah, here we go, we're breaking out, it's like if people that are getting short right now, you think about the opposite of that 24 hours ago. You got people that were in European trading yesterday morning. They were scaling in the longs, they were cutting out the shorts. How do they feel right now? Where do they want out if they're still short, or they're still long, excuse me? They're probably going, oh my God, the wheels have freaking fallen off the bus right now, and Tom says that's why we have stops. No. Forget that for a second. Let's talk about Tom M, the institutional trader. Tom M, who is an institutional trader and was buying that breakout, thinking, hey, this is going to be the run up to 120 that I've been anticipating. We finally had this consolidation. We're going to break through 115. We're heading back to 120 now. All right. That trader right now, that institutional trader, that's on the long side is going, oh my God, all right, so where do I want out now? And my 2 cents is, any move back up to like the 113.70, 114 level, anybody who's long is going to say, get me the hell out of this thing. I mean, I think we're going to have a problem getting back to up, back above 1330, but we can have a false breakdown today. And like I said, this is not the day to be to put your guard down. You know, we could very easily have a false breakdown and rally right back. But people that are stuck long, they're going to want to get out. And I think any move back up to 114, that's where their exit's going to be. They're going to be like, thank God we got back to 114. Oh my God, there is a God. Thank God. Okay. Now we're in a range, but if we get a solid breakdown today, all right, we're going to be at the upper end of our range, and generally speaking, a very bearish trend. Okay, so at the upper end of our range, and we might have to turn bearish here for a little while in the euro dollar. Okay, all right, just as we were down here, when we start reversing, it was bullish as we were going back into the range. We could turn slightly bearish after today, going back to this range. Anyway, all right, so there's the euro. Let's go over the cable. Now the cable's outperforming, and a lot of that has to do with the cross flows that come through the euro pound. The euro pound's getting decimated today, thank God. But the pound's just kind of holding up. Now the pound's a big hot mess. It is. I'll tell you, I would hate to be. What the hell is that all about? I don't know what that's drawn there for. I would hate to be long the cable. I'd hate to be short the cable. I'm pretty thankful right now I'm not trading the cable, because this is a big mess. All right. So let's point out some of the obvious, which I think we should. Okay, we've got this inverted head and shoulder pattern, but this shoulder blade here on the right side, it's developed way too long. We've lost our symmetry, so I'm not convinced now at this point that this is an inverted head and shoulder pattern. Now my mind could be shifted, obviously, if we like in a hurry, rallied above 145, then I would say, okay, fine, we did it, and it wasn't very symmetrical, but we did it. Obviously, the euro would have to be heading up towards 115 in order for that to happen. But what looks more likely at this point is that the euro broke through 113. We have some strong data. The euro starts cracking through 112, 112.50, 112. That pound is going to be pulled down by its piggy tails back down to 140 and maybe even below. And then next thing you know, you have this, everybody who's trying to trade this head and shoulder pattern, they're going to get all stopped out, right? That seems like a pretty likely scenario, especially if the dollar starts to pick up steam from here. So we have our 786 retracement. Again, I'm pointing out some of the obvious. This right here is going to be key resistance for today. All right, that resistance right there. All right, that's key. I'll just mark down the spike high actually. Oops. Let me delete that. So we'll mark down the spike high. Now let's talk about support. Where's support at? Like if you're long the cable and you go, oh man, I need to get out if it breaks back below 142. Is that where your stops are? Whatever that spike low is. That low comes in at 141.95. I'm gonna write that down, because if we break through that 141.95, I suspect that means the dollar's rallying. I also suspect that means that we're going back down to 140.50, right? If we break through here, we're probably heading right back down here. So resistance is 143.45. Sorry. And the cable's a big hot mess in this range. The Swissy. Now, I got asked by Nick, he's like, hey man, you gonna take any of your dollar longs off the table, ahead of data? I might pull some of my, euro profits. I'm still short some Kiwi and Aussie. I'm a little upside down in the Kiwi. My cost average, I'm down 34 pips, and my Aussie, I'm down 29 pips. I might pull some of that that off for a loss. Maybe some of my euro dollar for a gain. I'll keep my Swedish krona, and I'm definitely keeping my Swiss franc. Now, the thing that you're probably asking me is, well, why are you going to keep your Swiss franc? If I've been planning this trade, and you guys have heard me say for the last 3 months, hey Blake, where are you going to buy the dollar Swiss? Well, I don't know, Fred. I think I'm going to buy the dollar Swiss at 95.50. Hey Blake, where are you going to buy the dollar? Where are you going to buy the dollar Swiss? You going to buy it right now? No, no, John. It's at 97.50. I plan on buying it at 95.50. Well, if I finally get down to 95.50 and I own it, I'm not going to be so quick just to pull it off the table. If I've been sitting here planning this trade for months and months and months, which most of you know, why am I going to let it go now? So I'm going to sit here for the last week, sitting underwater 60, 70 pips to take a 30, 40 pip profit. No. If you trade like that, you know what you're going to do? You're going to spin your wheels for the rest of your life. You're never going to make money. So, are there certain trades that I might pull some profits off of? Yeah, maybe even cut some losses a little bit. Yeah, there's some things I could do with that. But on the Swissy, hell to the no. I've been planning this trade for so long. You're going to have to pry my dollar Swiss out of my dead, cold hands. Got it? All right. Anyway, no, but there are other dollar pairs that I'll probably, I might take some positioning down, but I'll make that decision here in the next 45 minutes. Dollar Swiss, look, 618, we're above it. We were brushing around it for, the last week, very frustratingly. And now we're trying to make, some gains. And I'll tell you right here, and you guys, we wrote down this number so many times over the course of the last week and a half that you should know it by heart. 96.60, right? To take the downside pressure off the Swissy, 96.60. Okay. We are still in a range. 96.60. Now, the dollar Swiss could very easily give all this back. Then I'll just be frustrated again, like I got blue balls or something. Whoops. What? And he moved back down to 95.50. I didn't just say that. Erase that from you didn't even know what I'm talking about. Good. And he moved back down to 95.50 from here. Probably going to be fairly well supported. Amanda said, you are a Smurf. You definitely did not get it. All right. Well, no, maybe you did. Anyway. All right. 95.50. 95.50. All right. 95.50 is some support there. Okay. It's not great support, but I feel on dip back. Somebody said Ziggy bleep him. Ziggy has no control over my mic. Ziggy's just a Wise Trade customer. He puts out videos and all of his stuff because he's just cool like that. But Ziggy has no control over my mic. I only control the mic. I got the mic here, folks. Okay, sorry. Stop goofing around, Blake. All right. 95.50 is any dip probably back down to this trend line support should be well supported. Let's go over to the yen. So the yen broke through. Now this is a double bottom. Okay, if we can sustain this breakout, guys, we have a double bottom that actually points higher. I tell you, I didn't think the yen pairs would be the yen would be able to do this. Kind of happy because, frankly, I don't mind. I wouldn't mind shorting it again. But if you look, boy, sometimes the stuff, it's like magic, right? It's like magic. All right. We have a double bottom. If we can extend this double bottom, we're heading back to 110.50. So If we get back to 110.50, you have to think about what the ramifications are of that. If the dollar yen gets back to 110.50, that means the dollar is probably staging a rally across the board. All right. Also means the risk appetite could possibly be a little bit stronger. What it also could mean is that, man, we could have a really nice short setup for a couple of days. Ziggy. I had to retweet it. That's great. Okay. Anyway, if we, oh crap. All right, that's a 50% retracement too. All right, so look, if we can hold on to these gains, that's where we're going. Give me to Monday of next week, maybe, roughly, Monday, Tuesday. I'm a seller of the dollar yen up there. Okay? Now, does that mean we're going up there? Not necessarily. Let's see where our 127% extension of this range is taking us, because that's going to be our resistance today. Resistance comes in at 109.50, which is not too far from where we're at. Beyond that is 110, okay, which is 161% extension. So I will write down 109.50, 110.00, and this is in a bearish trend. Just because we're coming out of we have a double bottom does not change the fact that we're in a bearish trend with this head and shoulder pattern. Just because we have a rally right now, and we might post a nice green bar there over the next couple of days or so, okay, doesn't mean that it's changed the backdrop of the head and shoulder pattern or the bearish outlook of the dollar yen. All right, so right now we have the dollar yen that's staging a bit of a rally. Now, where does support? So we have resistance at the 127% extension, 161% extension. Support now, I would say if you're bullish the dollar yen, and like let's say you've been buying the dollar yen for the last several hours, like let's say you bought it yesterday at the New York close because you're like, man, equities are strong, we're going to gap up tomorrow, I'm buying the dollar yen. I heard what Blake said, I think the dollar is going to bounce, and I got long the dollar. And let's just say you did, which I don't own the dollar yen, but let's just say you bought it at 108.60, we're at 109.30, whatever. Okay, where do you say, okay, I'm done with this long? Previous high, which is resistance, now support, which is key support, which is 108.75. If we get back below 108.75, that will be a failed breakout. If we break back below 108.75, that will be a failed breakout. Dollar Canadian. Dollar Canadian. I got to show you a lot of stuff with the dollar Canadian. All right, so bear with me. Let's go over to the monthly chart. Okay, so the monthly chart, you'll notice that I have this fib drawn. You see it? This is on a monthly basis. Why did I put it right there? Because that's the last time we had a lower low on a monthly basis before we rallied. Okay, you look at everything else, it's higher low, higher low, higher low, higher low, higher low. Higher low, higher low. You see that? Now we could go to the very, very bottom too, because I think that's viable. But I went to the last lower low on a monthly basis, trend-wise. Okay. You see where the 38% retracement came in? 127.50 roughly. What was the low yesterday? The low yesterday was 127.49. All right. Also, the 127% extension was 127, 157, 127.59. So we had a 38% retracement on a monthly basis, 127% extension on an intraday basis, and on top of that, we have a butterfly pattern, which is a harmonic pattern, which looks like this. Okay, that's a butterfly. So we have a butterfly, and on top of that, we have channel support. Channel, 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 channel support. We overshot it by a few pips, but hey, what the hey? A lot of confluence down there. All right, because we had all that confluence and because we had this butterfly and because we had that 127% extension and had that 38%, there's like a lot of confluence down there. And I'm like, God, I just don't want to sell it after having that big of a drop over the course of the last couple of weeks. We've gone from, basically 132 to 127 and change just over the last week and a half. It's like I just can't get myself to exit my longs. Now, I haven't stepped up my position size either because of the Bank of Canada, but still a half-size position. But there's so much confluence here. If the BOC plays ball today, I might actually buy some more dollar Canadian. If the Canadian starts to the dollar Canadian starts to bounce from here, I will write down that 127.50 is really critical support. 1.2750 is critical support, and I will tell you that I have my stop situated below there because I can't risk any more than that. It's already pushing my limits as far as risk goes, but technically there was just so much set up there that I just couldn't pull the plug on it. Now, where's resistance today? Well, in my opinion, if we get back above here, which let's go over to the hourly charts. If we get back above here, that's going to take a lot of the downside pressure off, and that comes in at 128.50. Okay, so now this is following the Bank of Canada probably. 128.50, that'll be resistance today, and if that comes off, it is still in a very bearish trend, but it'll take some of that pressure off if we can break above that. All right, when I come back, we'll do the Aussie Kiwi. Oh shoot, I put them in the wrong spot. 127.50. My bad. 128.50. I'll just switch this over to range. We're at the top of our range. This is bearish. It's bearish. Let me get rid of that. Delete that. Delete. Okay, when I come back, we'll do the Kiwi, the Aussie, and dollar index, all that other crap. We'll get it all done before the news, the data. I'll be back in a few minutes. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We're going to finish up with the Aussie, the Kiwi, everything else. Let's get those done. So let's go over to the Kiwi dollar. All right, here's the New Zealand, and we have okay, this is really interesting today, and I think obviously by the end of the day this will be, tell us a lot. This move that we've had above the 69-cent level, initially, it looked like a failed rally attempt. All right, and this is going back into last week or 2 weeks ago. Looked like we had this failed rally attempt above 69. We stalled at 69.65. We came down and we held the 618. So there's a 618 retracement that held us right here. Okay, I'll put that. That was a 618. I don't want to have to draw it again, but that was a 618 retracement, as most of you know. Okay. Now we've staged this rally over the last couple of days because risk appetite's been obviously improving, but now we rallied towards the highs, and we came up short last night in Asian trade at 69.65. Now we're setting up a what could be a reversal candle, shooting star type of thing, especially with the dollar strength coming through, but that's not set in stone by any stretch of the means. Like I said, we have this upward channel that we've been talking about for the last couple. I guess we've had this drawn out here for the last couple of weeks. I don't know really. I have a short Kiwi just because I really like being short the Kiwi dollar almost at any given time, in some way, shape, or form. But right now the Kiwi is holding up, and I think we have to get back below, well, obviously 69 cents, but probably I guess below here really to shake up any Kiwi longs, which comes in at 68.60, and that probably is about a 38% retracement. And that's about a 50% retracement. Okay, from this low, most recent low, to the highs. It comes in at roughly about 68, 60. So I'm going to write that down as support for today. 68.60. Now resistance is 69.65. Period. End of story. That was the highs from over here. Okay, which is still significant on any rally, and if we can break that, then we're obviously going to squeeze up towards 70 cents. That's without a doubt. And remember, we have a ton of data today, which could really shake things up. All right. So I'm actually probably going to cover some of my Kiwi and Aussie short just to take a little bit off the table for just to minimize my positioning before the news. But anyway. And I'll take a loss too, because my Kiwi right now, I'm down 37 pips in my cost average, which, if I reduce just some of my size, just to reduce some of the risk going into the news, which, hey, it's all about risk management, right? Got to do it. Here is the, let's see, Aussie. Here's the Aussie dollar. All right, so the Aussie failed rally attempt. Also, here, let's remove this. Let's remove. I'm gonna redraw that. So just bear with me. I'm just doing it just for you guys' sake. Okay, so we have obviously key resistance up here. That's 77.20. We have 161% extension of this last swing down. Comes up right at 77.27. And then obviously resistance here, all right? So now support, which I think is really key, will be right here for today. See that? Actually, you know what? Scratch that right there. Because that's that spike low right here. See all those wicks? The body's held below it. So that's going to come in at 76.20. That's going to be support today. 76.20, and resistance is 0.7720, and that is key resistance, and we're in a range. But the thing is if obviously if the Aussie breaks out, oh, you know what? I take that back. This is still in a bullish trend, and look, we've been in a bullish trend ever since clearing this 74 and change. We just have, it's like kind of like gold. We haven't been able to capitalize on it. We just haven't been able to capitalize on this rally, and we've had all this dollar weakness, and yet the Aussie just kind of not following through. I thought we'd be up by 80 cents already, frankly, with the rally and risk, strength in the and the precious metals. I thought we'd be up a little higher. We haven't been able to capitalize on this breakout, but still, it's still bullish. Okay, dollar index. All right, now here's the dollar index, and as you know, this is. I can delete this fib. Okay. This is the descending wedge, so we are, let's get rid of this for a second. It's kind of like where we're at is resistance, you know what I mean? That's it right there. Let me readjust that. All right. So we're already at resistance right now, but I guess key resistance is going to be at 95, right? That's where things get really bullish, is if we can clear 95. 95.00. I doubt we clear that today, in my opinion. I really do. I think, we get back up towards this 94.90, you're going to see some pretty good resistance. You're going to see some sellers stepping in right here, especially knowing that this is a descending wedge. You're probably going to get sellers stepping in right around here. All right, support. Let me think about this for a second. 94.60. I just don't know where good support is for the dollar index. I don't. I'm going to write down 94.30. It's just not great support. Okay. It's not like great support. We're in a range. We break through this out of this descending wedge. We're going to turn bullish, going right back into the mid range of this big huge range. All right, let's go over to the peso. So I'm still along the peso, down like a little bit because it's my average is just right at 1760. So stabilize on the 618 retracement. Okay, that's good. Here, let me remove this fib. I don't want this big one. We can get rid of that for now. Okay. So the other day on Monday when I drew this, we actually stopped and then we continued just a little bit lower. But the 618 held, and that comes in at 1740. Okay. Resistance for today is going to be right through here. You can see that spike high coming up there. That held us at 1768, 1742. And just remember, if we're heading back up towards like 1768, that means that the market's getting a little risk averse. We're in range 17.42. But notice how, we're starting to create higher lows, okay? Higher highs, you see that? Higher highs, higher lows. It's important, from a, when you have this, I think we're in a big range, but when you have this downtrend over the course of the last, couple of months, remember when we started, we were shorting the peso up here, close it out here, and short it again somewhere through here, and now that the momentum's slowed and it's trying to shift, you see we're now making like higher highs and higher lows. That's a big deal when you're trying to shift back up to, maybe back up towards 1850 or so, and it speaks a lot for risk aversion too. I know if you look right now in the futures, they're up 87 points, but in the Dow futures, but this bottoming in the dollar Mexican peso suggests that we're in for some rough waters moving forward. Okay. All right. So anyway, that's the peso. Let's go over to the U.S. dollar. Oh, right here, Norwegian krona. Okay, so the U.S. dollar, Norwegian krona, we have this head and shoulder pattern. We hit channel lows at the 88% retracement. We hit channel lows, and we're bouncing pretty good. All right. Frankly, with crude oil stalling at 42 bucks, okay, and the euro dollar starting to break lower, this right here is a good long. Now, that I don't know if you need to be picking up right now, because I think we're going to find some resistance right here at 825. But if crude oil backs away from 42 bucks, and let's say we go back to 38, that doesn't seem too far-fetched, right? We go from 42 to 38 bucks. Not too far-fetched. And the euro continues lower towards 112. This U.S. dollar Norwegian krona is going back to 840 without much of a issue. Okay. So anyway, support 812, resistance 825. Oh, oops. $8.12, right? $8.25. And I'm gonna keep us in a range. And then the Swedish krona, you guys know I bought it yesterday. If you don't, I'll reiterate. Channel lows yesterday. We tagged it, created a false breakdown. Now we break 818. This thing is gone. Gone, baby, gone. That's what I'm hoping for. We just need some strong data. Be nice. Support right now. It's probably today's lows, but I'd say support's down here at 806.50. Okay. We're at the low end of the range. I'll tell you guys, if this breaks, this is like the dollar index in advance. You know, we break through here, the dollar is going to get crushed. I don't have any doubts about that. Okay, but if we can turn higher from here, that's probably going to tell you a lot about what the dollar is going to be doing in the near future. Okay, here's your bias chart. Let me go ahead and take some questions that you've written in, so just bear with me. I'm going all the way back here.